Hey, good morning. I want to thank everybody for joining me this morning. Most important, heading into the weekend, we were all concerned with the debt ceiling, knowing that the market would be bullish and go higher if they reached an agreement. Whereas if we were still going into Tuesday morning and there was no debt ceiling talks and both sides were stalling, we know the market would likely tank. Okay. So I'm going to talk about debt ceilings real quick, but let's remember also China seems to be struggling. COVID seems to be on the rise in China. I'm not so concerned right now with the US, but understand if China struggles economically, that will lead to Europe struggling a little more economically, which they're already struggling, and that'll roll over onto the US. So there's no avoiding that. And that's my main concern as the markets are ripping higher. So we have a debt deal in place, par se, which will be voted on Wednesday. Now, keep in mind, there are two senators that have said they might delay the bill, Michael Lee, and then you had Lindsey Graham. We all know Lindsey Graham. I think he's from South Carolina, but he used to always cause problems. With that said, if the bill is going to pass anyway, they will not delay the vote, meaning these two senators will step in only if they believe they can win their fight of rejecting the latest bill. Now, if the latest bill rejects, market goes down. But let's talk about what the latest bill has in it. And I'll summarize that real quickly and the effects it has on the market because we're all day traders, or most of us are trading or have longer term investments. So debt ceiling, it's on its way to the Senate Wednesday. Why not today? Because they actually have to write up the bill. Speaker McCarthy said he's hoping the bill will be under 150 pages. Now you're saying 150 pages. That's damn long. Yeah, some of their bills go like 1,000, 2,000 pages. They add in all that bullshit, sort of like Senator Manchin did this time. Senator Manchin pushed through. He's the senator from West Virginia that stalled other talks earlier last year, whether it was COVID or aid for Ukraine or whatever. He passed through this pipeline deal, and now his pipeline stock is up 37% this morning. It's ETRN. I believe he has a family member that works there. They're in charge of the pipeline. Now, here's the thing. Late last week, calls, $8 calls. The stock is at $6. It closed on Friday. It was as low as $5.88 on Friday. The $8 calls were ripping towards the end of last week. The stock is up 37% this morning at $8.40. So those calls are going to be ripping higher. So again, that just says more about the political system, how people will hold bills in order to get what they want included. All right, so debt ceiling. It's going to avoid cuts to Social Security, Medicare. It's going to avoid cuts to veteran programs. I guess that's a win for Democrats. It's going to cut out new money that has been slated for the IRS, and it might even lower money going to the IRS in years to come. And accountants are probably like, oh, fuck yeah, all right, let's do, because, that's what accountants do. Now, let's talk about the markets, okay? Let's remember when a debt ceiling got done. I think it was 2013. Then we had another one in 2011. Okay, one of those years, the U.S. bond, the U.S. Bond rating, debt rating got downgraded. The markets fell 16%. Okay, so that was pretty significant. S&P went down 16%. The other year, I think it was 2013. Okay, there was no hiccup, there was no downgrade or for the rating for the U.S., and the market still fell, I think, 5.5% when the bill was signed. So why is that a possibility? And yes, certain stocks are ripping forward this morning. We've got some people on our SOC Discord, like Love, that entered into some Tesla calls before close on Friday. She rolled over some NVIDIA calls that she had. NVIDIA's, I think, popping to 408 this morning. I mean, it was like, 393 to close, something around there. Okay, so what's going to happen? And when I talk about liquidity being pulled out of the market, what the hell does that mean? And why is it bad news for the market? All right. So let's remember when COVID hit and we were in the pandemic 2020 and the market threw up on itself and we were at all-time low levels and then the market started going up. Let's remember the Fed was supporting not only the U.S. people by sending out stipends or checks, stimulus checks, but they were actually injecting liquidity into the financial system. The Fed's balance sheet went from $3.5 trillion to over $9 trillion. And now we hear the word quantitative easing. And we've heard that since November of what was it, 2021, and we're now in what, May of 2023. So we've heard that the Fed is going to reduce their balance sheets for some time. Then they started reducing it. Then we had the banking crisis or semi-crisis, what, in February, with a couple banks going under, and the Fed injected $400 billion more onto their balance sheet. So liquidity is extremely important to the market. So as soon as the deal gets signed, the Fed now has to put money back in its piggy bank. You all hear how the U.S. is running out of money. We only have $38 billion left. Now, if we don't have some deal by June 5th, we'll be completely drained. Okay, so we make a deal. Congress, Senate signs off on the debt ceiling. It gives us uncapped for the next 2 years. So whereas people were saying we're going to cut spending, it's uncapped for the next 2 years while Biden in his office. So understand, the first thing the government is going to do is they're going to issue $700 billion to replenish their piggy bank, right? To replenish their savings account, which will pull liquidity out of the market, okay? Because if this $700 billion has to get bought up, money has to come from someplace. I'm thinking it's coming from the Qs. I think it's coming from technology. We've seen stocks like AMD follow NVIDIA's move. AMD was what, 80 something dollars? It's up to 131 this morning. Okay, so let's explain liquidity to the retail trader, right? To you and I, the lamest, okay? So liquidity makes markets more efficient. Liquidity leads to market stability. The more liquidity, the easier it is for us to enter into a trade and exit out of a trade. Let's just look at the bid and the ask. When there's liquidity in options, meaning you're trading an option that has a ton of volume, all right? A ton of volume. Let's talk about like Palantir, okay? I only mentioned that because Palantir is spiking recently. We've got AI news. It's clear of $14 this morning. I spoke about it last week at $9.40 after it pulled back from its earnings run. Earnings run past $10, pulled back to $9.40 as at $14 this morning, up 40% over the past week and a half. All right, but understand, volume on Palantir options is pretty good, meaning when you want to enter into a contract, the difference or the spread between the bid and the ask is probably only a few dollars. Okay, I can enter at 102. If I was selling it, I would sell it at 104. $2, 2 cent difference. But let's say you're playing a trade and the volume on the options are dead. You're picking something that just has no activity. There's 5 open contracts. Nothing's been traded on the day. Understand, the spread between the bid and the ask will likely be something closer to 50 cents to $1, meaning $50 to $100. I want in. The bid is $40. The ask is $80. Right there, you've got a substantial spread, and there's no volume. So if it's illiquid, not liquid, okay, that means when you're entering into the trade, you're going to pay 80 or close to 80, close to the ask. Now, let's say the stock doesn't move and you get credit for your time value. When you're looking to sell it, the bid is still 40 and 80. If you're going to sell it, you have to put in at 40, 45, 46. Maybe someone will come up 10%, 44. The point is the spread, unless you're correct about the trade, because there's no volume, it's illiquid. All right, what do? I try and stay away from illiquid trades. If the market becomes illiquid, okay, what would I likely do? I would likely stay away from the market or be more bearish, okay? Removing liquidity generally leads to higher interest rates, causing markets to lose stability, making markets more volatile. Simple as that. I mentioned the example already, so I don't have to repeat that. If you like what I do, please, I'm here every morning at 8:30. Let's see. Oh, okay. Now we'll skip that. All right. So we could talk about what's going on in China. COVID seems to be spiking a little. So we have some Discord members that are taking some chance with maybe some BABA calls. Me personally, I'm staying the F away from Chinese stocks. I don't like Chinese stocks. I don't trust China. I don't trust Chinese companies. Nothing. I love Chinese people. It's just the government and the way they run their country and the economics and whether, see, if they were transparent, if they came out and they were 100% truthful to the rest of the world and said, this is our earnings, this is what we're doing, this is what we're thinking, then it would be okay. All right, so let's talk about what other things I wanted to mention this morning. Remember, I mentioned these items to help you process the market. I will talk about specific stocks. If you have any questions, ask them on the side. You want me to look up one of your stocks? Great. You want me to talk about Discord or what I do to start every morning? Great. let's go real quick before I mention a couple of things. Let's just go to Discord. On May 25th, right, I made a market update video. I was looking at 2 positions, all right? The 2 options that expire tomorrow, likely enter one of them. One of them was 412 puts. They were $1.18. One of them was 415 calls. They expired on Friday. Understand these puts, options are designed to go to zero, went to zero most likely, right? 412 puts, we closed at what, 420 and change. These SPY calls went over $5, probably even $5.50. So zooming in and out, I mentioned I wouldn't chase calls, but if you liked it, you'd look for it to come back down and then you'd make a trade from there. So there are always good trading ideas on our Discord. That's not predominantly how I use our Discord to follow my own trades, but I use it to look at big option flows. Now, I've mentioned before that both MooMoo and Webull both offer options information to tell you how many open contracts, to tell you about if they're liquid or illiquid. The more open contracts, the more volume, the more liquid your options plays are. Okay, so what's happening today? We've got Case-Shiller home price index at 9 a.m., so that'll be dropping in 20 minutes. Consumer confidence, which really doesn't do very much for the market, at 10 a.m., and then we have a Fed speaker barking at 1 p.m. So let's say the debt deal gets passed, okay? Let's say the markets carry on like usual. Let's just put up and down for the markets aside. Let's talk about the Fed real quick and what's going to be going on. So the Fed's next meeting is in 2 weeks. What's happening before those 2 weeks? I think we have another CPI number drop for June and a jobs number drop. So understand, the Fed doesn't really care about the market. They're trying to tame inflation. So there will likely be, and I can almost guarantee it, I would say in my estimation right now, we'd be at 90% that we are going to raise another 25 basis points come for the June meeting when the Fed meets. Now, the crazy thing is, and I can't say 100% because you had some Fed chairs saying they didn't want to raise last meeting. You had some other people say, let's pause in June and raise in July. Yeah, this is all in the Fed notes that dropped last Wednesday, the FOMC notes that dropped Wednesday. I think it was like 2:30 p.m. All right, so Fed will raise, should put downward pressure on the market, be more pressure for the banks as rates go up. Really have to focus on the jobs numbers. Now, here's the thing. If job numbers come down, then possibly the Fed can pause. I might reconsider. But if job numbers are like, hey, man, more people are getting hired, jobs are good, job growth is good, yeah, the Fed's got to act, and they've got to act. Now, this is an interesting post right here. Just want to show you guys. Okay, so you guys can read with me. Fed balance sheet is in dark blue. I've been talking about quantitative easing. NASDAQ is in light blue. Okay, so what do you see? Fed is in dark blue, right? Oh, we already peaked at the same point. It seems to follow the same pattern. Now, this shit is true. It follows the same pattern. So I'm showing you dark blue. Fed balance sheet is coming down. Light blue is not. Light blue is the NASDAQ, and the NASDAQ is popping this morning. So what might I think? I mean, I would love to say this chart is going to be right, and I'm going to get into puts. But far from it for me to trade against the momentum in the market. Now, I'll mention a trade I got into on Friday. I carried over some puts from late Thursday that I got in that were up 20% going into Friday. I was hoping the markets might pull back a little. Just consolidation. Not saying the markets aren't going higher, just consolidation. I was wrong. I exited out of that trade maybe at like 9:35 that morning. I saw 2 doctors on Friday. I wasn't feeling good. I got some bad news from one of the doctors. I was a little upset. And rather than just sitting on the sidelines, I literally entered into an emotional trade. I was like, I'm so freaking pissed right now. And I was kind of losing my shit. And I'm like, I'm just going to put $500 on this. And I entered really quickly, and I literally lost $220 in the course of 5 minutes. And I sold it. And I was like, you're just, not only were you upset, but now you just compounded the issue by making another trade that you had no place being in. And you lost a quick $200, and that could have been lunch, dinner, groceries, whatever it is. There was just no need, and it was just an emotional trade. So when I tell everybody, please, don't trade with emotion, that's exactly what I'm talking about. And it goes into another lesson really quick. Now, I mentioned history has a way of repeating itself. So when I show you a chart or a graph or speak about what happened in 2013, 2011, it doesn't mean that it's happening today. It means you have it in the back of your mind. Now, history repeats itself. Let's say you're bad at trading, okay? I don't know who I'm speaking to out there, but let's say you're improving your trading, but you're still not so great at trading. Understand, if you keep repeating the same type of trades, hey man, I trade in the morning. I only trade between 9:30 and 10:30. I go 40% on my trades. You're not winning at your trades. Why would you continue to trade between 9:30 and 10:30? Doesn't make sense. You follow the same behavior, you're going to end up with the same results. So this goes for anybody. It doesn't matter if you're winning trading, okay? If you're a winner trading, winning at trading, and you're a winner trader, you want to look at your trades and analyze, well, when did I enter most of these winning trades? For me, most of my winning trades are like 2 p.m., 2:15 p.m., 2:30 p.m. I'm in, and then by 3:30, I'm out. What does that lead to? The 3 S's, right? Safety, secure profit, and stress-free. That's what I strive for each and every day. So where people might be anxious, like, hey man, the market's ripping 2% this morning. What do you think? Should we buy puts? Should we buy calls? I don't know. And I really don't care. I mean, if I'm not in a specific position that I'm looking at, I'm going to let the market play out. I know of the bigger picture. Debt deal on Wednesday. Once it gets signed, we need to pull liquidity from the market. So I'm looking at the bigger picture. So understanding what's going on in my mind, not having to actually trade instantaneously. So if you're following the same patterns, please just make a change to the way you trade. If you're a losing trader and you buy 20 contracts at a time, try this strategy. Buy 1 contract. You're still going to lose the same percentage. And when you're down 50%, when you usually take the stop loss, maybe you could say to yourself, shit, I just saved $2,000 that I would have blown. Let me go into that position now when it's down 50% off my first entry. And wow, when it goes back and I would have been break even on it, instead of being break even, I'll be up 100% because I entered at $50 rather than $100. It's down 50%. When it goes back to 100, that last trade is going to yield me 100%. So again, just strategy. I mentioned Michael Lee and Lindsey Graham, 2 senators that could stall the bill in Congress. If I had to put a percentage on it, I'd say maybe 2%. The Hang Seng market in China down another 1.6% overnight. It's a new COVID strain related again. Yeah, so COVID spiking. I mentioned the other chart I showed you. Here's another chart. I love to see this. So what bull market has started with an inverse yield curve? And you're seeing inverse yield curves, that the line at the bottom where we are, specifically, where is it? Let me show you. Is this one right here? Okay, so the markets are ripping higher and the inverse yield curve is here. So dating back to, and let's see how long this one dates back to, not so long, only 1989, okay? Only 34 years of data here. 34 years of data, and never have we had an inverse yield curve as steep as it is now, where we've been in such a bullish market. So all you bulls, yes, keep making money. Just be extremely cautious when the market does turn around, okay? SPY, dark pool levels, 3 billion reported off exchange on Friday at 414. That could probably be seen as bullish, seeing how we pushed all the way to 420, 421. An additional 4.5 billion reported at $420.04. Understand, a lot of people like myself thought 420 was a little top heavy. Okay, yes, we're spiking to 423 this morning. So I'm going to pay specific attention to that and how the market reacts. Now, again, the market I thought was going to rip higher on Tuesday and come down on Wednesday and possibly towards the end of the week. That's what I thought ending last week based on the deal. Okay, another interesting point, and I kind of mentioned this before, solar power is now due to overtake oil production investment for the first time ever. Okay, this is by Reuters that dropped this story. Solar power due to overtake oil production investment. So I meant the money going in. What does that mean? If I'm going to look at solar companies, I might look at Canadian Solar, First Solar, Interface Energy, cheaper energy. Yeah, those are my energy plays. If I wanted to look at AI plays, okay, artificial intelligence. We all heard Kathy talking about, yes, I sold my NVIDIA, but NVIDIA is okay value because all of it's AI. Oh, Microsoft is doing AI, Amazon, everybody's doing AI. So here are my AI companies, top of the list. First, we have AI, which is C3 AI. Again, it's pounding up another 12% this morning. It was up 8, then 9, now 12.5%. What is it, $36 and change? Oh, just hit $37. This is AI, the same stock that we spoke about at 18 that went to 30 that pulled back to 21. Here's the deal. No stocks only go straight up. They have earnings later this week. So if you wanted to play on AI earnings, okay, and they would have to stink because everybody loves AI right now, but if the earnings actually sucked and the stock runs up to $40 until earnings, you could see a pullback back to where we closed on Friday at 32. So if we run to 40 and we pull back to 32, that'd be a 20% drop. So again, I don't want to catch a falling knife, meaning I'm not going into AI puts while it's still running up. But as soon as I see some resistance, and it might not happen today, it might happen tomorrow, may not happen tomorrow, it might not happen at all. Okay, I think earnings are on Thursday for that company. Centennial One, which is just S, it's up 3.3%. MDB up 2.5% this morning. I mentioned the pipeline stock where Senator Manchin, his wife has investments, ETRN, all over the news, pumping up 37% this morning. We've got the SPY, which is up 0.56%. It was up as much as 0.75, 0.75%. It kind of is wavering in this range, just sitting. Tesla's up 4% at 201. There was a couple more companies I wanted to speak about. Let me just see if I can get that. I don't remember where they are on my list. This is a message. Alibaba. Okay, Walmart. No. Okay, I'm following Starbucks because I mentioned pre-market. I saw, NASDAQ was ripping higher. Dow actually went at 8:18 a.m. from green to red. I'm not sure where the Dow is sitting right now, but when I think of Dow stocks, I think of something like Starbucks. Then when I hear China news about COVID concerns, now remember, U.S., we were fine. You get injected, you don't get injected, you wear a mask, you're okay. In China, they had a zero tolerance policy. Have they changed that? Have they lightened it? Yeah, they lightened it towards the end of COVID. But let's say we had a new strain in China, and I'm not sure what's really going on in China. I'll have to put in more research this weekend. I spent taking care of myself, and I spent it with my family. With that said, Starbucks is $98.70. We got worries in China. I've seen some large block trades selling out this morning. Starbucks, if you're looking, has been an outflow on 2, 4, 6, 8, 10, 12, 14 out of the last 17 days outflow. And we know that the Dow has probably dropped 15 out of the last 18 days. So what's to tell you that pattern should change? Well, the debt ceiling got signed, Matt. The Dow is going to go up. No, that's bullshit. No one can say, hey, man, the whole entire market should go up. And if that's the way you invest and you don't look at certain stocks, then, oh, Lord help you. Please just pay attention to specific stocks. Make 1, 2, 3 stocks like family. All right. Questions. Lulu has earnings coming out this week. Any comments about Lululemon? Funny thing over the weekend, Lulu, there was articles dropping all over Twitter and all over the news. What happened is somebody in Atlanta, 3 individuals robbed a Lululemon store, stealing, a whole bunch of items, ran out of the store. 2 ladies that work at the store called the police and were subsequently fired because Lululemon has a policy in place that they do not call the police, that they do not prosecute against shoplifting, even though shoplifting is terrible in their stores. And they do so because here's what the employees are told to do. Once someone steals items from the store, they are told to figure out what was stolen and to go scan the QR code into the register so they can file an insurance claim. So they really don't want to get in trouble with any law. Here's what could happen. Say an employee tackles a would-be person that's stealing, a shoplifter. Okay, the shoplifter breaks his arm and subsequently dies from something. Guess what happens? The shoplifter's family sues the store and says, you had no right to tackle my husband, my son, whatever it was. You could have just called police. You could have just whatever it was. And that's what we see happening. So stores now adapt these policies. Now, the fact that a couple of news outlets blew up this story and then it blew up all over Twitter, I seriously would not be surprised if literally people just walked into Lululemon and just started taking shit and walking out. In fact, I would never do that because I would be the only person to get caught. But it wouldn't surprise me. I might actually go to Lincoln Road today on Miami Beach and just sit outside Lululemon going like, oh shit, there goes another one. And I might film it if I actually see it. And it's a possibility. So what could happen? I mean, that's terrible PR when you're basically saying, steal from my store, we're not going to report you. Earnings later this week. Again, if you look at Lululemon, it's just, it would be great if you wanted to be a bear about this, even though the markets are flipping higher, you would have been. But what do you see? 2, 4, 6, 8, 10, 12, 13 out of the last 15 days outflow. Lulu was $386 and now it's $340. So you're talking about $46 off, which is about 14%. So, I mean, Lulu's already slid down 14%. Now, what could happen? Great question. Last earnings, which are impressive, leading into last earnings, the stock was about $300. So understand, if Lulu reports, sales that suck, which is a possibility, because let's remember, quarter by quarter, they reported in the first quarter sales from the end of the year. End of the year was holiday time. Sales, people, everybody's buying their shit. First quarter, there wasn't any like go back to school, like, hey, you need this shit. It's September. No, go back to school, happens in the quarter 3. You see the results in quarter 4. So I might think they would do well in quarter 4, quarter 1 reporting. This quarter reporting, no, but again, they're off 40 points from the high. So where could they go? They could drop another 10%. That's what I'm thinking. All right, let's see what other questions. Yeah, hit that like button if you like what I do. Again, I do this every morning. I'm here to answer whatever questions. You put them on the side. You ask me a question. I will do my best to explain, simplify. Again, all right. So let's see what we got here. All right, Fredo, question about Zim. Do I see Zim turning around corner or breaking under 13? Zim is an Israeli shipping company. I made a play on Zim, and I should have let it bottom out first, meaning bottom out. And I'll tell you what I think about Zim. Bottom out means it drops because they remove their dividend just for one quarter, and then it bottoms out. It comes to a little bit of a reversal, and then it goes back down a little more, and it's almost like a W, and then goes back up. So my thoughts are, yeah, we're part of that W. We're probably in the midst of the second and third line. So yeah, they'll still have a dividend in the next quarter, assuming they have earnings. Earnings, I think, are to pay 16% of earnings for their dividend. That's why a lot of institutions are there. So yeah, do I see it going to breaking under 13? I've heard people talk like that. No, I think this one's probably, again, if the market loses 5% in the next 2 weeks because of the debt ceiling, then yeah, it'll go under 13. If the market stabilizes and history does not repeat itself and no one gives a shit and we sign this debt deal saying there's no cap on the debt ceiling and the market seems to like it and doesn't throw up on itself and NVIDIA rips and we're at like 600 on NVIDIA, then yeah, Zim will be back at like $18, $19. What are you thinking on the QQQ, SQQQ? Yeah, understand right now, if you guys look at the markets, and I look pre-market, and I don't give that much effect to pre-market, but the Dow has been struggling in 15 out of the last 18 days, the Dow has been down, okay? Whereas the NASDAQ is ripping higher. The Qs, which were struggling at 325, and I was like, 325, better hold 325 and drop to 324. Understand the Qs. Where are we now? Like 350? I'm so curious where the Qs are this morning. Fuck me, I can't even type in shit. Qs this morning, 353. Yeah, okay. I'm glad we're in the 350 range, or else I would have seemed awfully silly if we were either higher, that, or lower. But let's remember, Qs at 324. Now we're at 354. That's 30-point move on the Qs. You're talking about an 8.8% move on technology, literally in the last week, the last 3 trading days, right? 324. Or were we 324 before? It is what it is. So it's either 3 trading days, 8 trading days, whatever have you. Still 8.8% is ridiculously, that's a lot of movement. All right, Even Flow, what's up, buddy? So Even Flow, DraftKings and Uber. So if I had to pick one to be bullish on, let's say you present me with DraftKings and Uber, and you say, Matt, you have to buy puts on one and calls on the other. What would I do? I would follow big money. How the hell do I follow big money? Well, the first thing I do is I go back to Discord and I will go to the Flows and Algos room. And I love to look at what everybody else is looking at. So when I see people looking at AI company, MDB, she's looking at the 3.7. So the average of they're selling it. The call premiums are going down. Now, this is an AI company. And I thought she was looking at puts. And then I realized it's an AI company, and I'm like, maybe she's looking at calls. So I'm still waiting for my answer on that, love, if you're around. She's looking at the big flow. Again, they're sweeping the puts. They're also sweeping the calls. Let's go down again. Let's just go to the bottom, what I would look for. Again, AI bot, Qs, cost of the puts, premiums for the puts is going to skyrocket. I'm assuming the fact that we're going to open up here, all right, because the white is the price of the ETF. I'm assuming not only will people be buying calls, so the calls will likely spike, but it's more likely people will be buying puts as well, so those will likely spike. Net premiums for the Qs. Again, we're looking at the price. You're looking at, I mean, you can see right here. Again, right here, you can tell, even though the price, which is in white, dropped, the cost or the premiums for puts dropped. And this is Friday. As soon as you're on Discord or some type of algo where you see the cost or the premium for puts dropping, you know the market's going to be bullish. So I don't care if there were 3 hours remaining in the day. And yes, the markets or the Qs pushed to 350. The Qs were sitting at what? 330 when you saw the swap. So the Qs went from, the premiums went from here to here on puts. So even as the Qs were sitting at 330, you could get bullish. You can go out a week, you can go out 2 weeks. As we're sitting now at 353, I would tell you, hey, like, I'm not chasing the Qs run, and I'm certainly not. All right. So again, what would I like to do? We're talking about those two stocks. So we're talking about Uber. So TR, I'm going to look at the net flow for Uber, which I believe would be more bullish. I'm also going to look at the algo flow for Uber and just see what the algorithm is telling me. Because sometimes there's not enough information. But what I'm looking at for Uber right here, I'm looking at the premiums for puts. All of a sudden last week, we did a flip, and the puts went below zero, whereas the calls took a little longer to spike, and the call premiums are up here. So I'm going to see how this opens this morning. But again, this would tell me that the bullish flow on Uber, and I'm thinking Uber probably could run up to like $42, maybe another 5%. The algos versus the stock price. Again, you're seeing a divergence. When you see a divergence and one line is up here, let's see the algorithms, and the stock price is here, 38.40, then you're saying, okay, they should meet somewhere in the middle. The fact that Uber is going to open up because everything is green this morning, the algorithms might flop all the way to 40, whereas the stock price might only go up to like 38.75. So there still could be a bearish divergence there. I'm going to do the same thing for DraftKings and see what we can find. Let's look at the net flow for DKing, and then let's look at the algo flow for DKing. Now let's remember, DKing, see, there's not enough information. So when I spoke about liquidity this morning, okay, I spoke about liquidity, the number of open contracts, the activity. I mentioned options like for AMD would be much more liquid than something that has zero volume. Like someone mentioned Zim. When I entered into my Zim contracts, I paid up. I thought I was going to be correct. I paid like $20 a contract. So I mean, it was between 15 and 20. I could have put in for 15. I probably would have got it for 15. The point is, I pay it up when there's not huge volume. So DraftKings might be one of those. You'd have to look at open interest. So how do I like to look at open interest? Well, I would go back to my phone, and I'd go back to the homepage, and I go back to the stocks, and then I scroll down, and I look at stocks, or maybe it's options. Here we go, options. So Webull has this where you can look at options. You can look at total volume, right? You can look at total open interest, okay? You can look at open interest total, open interest increase or decrease. So today I might look at what the open interest increase is, and I might see that. Just like I like to use MooMoo to give me my my theoretical pricing on options. So what do I mean by that? I will go to MooMoo. You guys see that? Okay. Go to MooMoo. I'll open up an option, and I'll know that, what is it? Tesla is up, 4% this morning. So I'll use my theoretical pricing to put in the Tesla's new price and be like, okay, my option, which closed at 55 cents, is now going to be worth $1.16 this morning. So how does that help me? It helps me because it closed at $55. I want to secure profit. I'm like, what is someone willing to pay? So I'll look on MooMoo and I'll be like, okay, $1.16. Let me nibble. Let me add another $3. I'll ask $1.19. If I'm in at $55, I'm asking $1.19. I'm already looking to secure over 100%. So what's up with Boyle testing lows? Again, we've got some traders on our platform that really like Boyle. Every time it's under $3. In fact, I think it's $2.75 this morning. One gentleman bought in at $2.77, another at $2.76. They're just playing the movement on natural gas. Natural gas is pretty beat up. Do I think it's at the lows? I think the lows were in the $2.50 something cent range. So, I mean, if you're acquiring now, you're taking your first position. Let's just say, one individual, I think he probably went in with like 30,000 shares, probably his largest position at any given time. Then he sells and takes profit, and he starts over again. So he probably bought this morning. Russ probably bought 3,000 shares at $2.76. If it goes down to $2.68, he'll probably buy 3,000 more shares, $2.56. Maybe he'll buy 6,000 more shares. When it spikes to 297, he'll get out of everything. So when he's in at $2.70 on average, 297, $3. So again, same thing with Boyle. Look for the support. Look for the ceiling where it tends to reject. You could do the same on any one of your stocks. When you hear the word or the term breakout, it means it's likely to go higher. Okay. With that said, past 9 o'clock. What's the next bank play? I don't know yet, but I'm glad you're joining me, Money for Nothing. I know you're usually working this time in the morning, so I appreciate you joining. With that said, I'm going to look into a banking play for you. Hopefully you'll join tomorrow morning, and hopefully I'll have a bank play. Again, I've been looking at Bank of America lately. I think I was in at $28.06. I think it's $28.80 now. I mean, it's not really popping. I still like to be short Deutsche Bank. I was in at $10.40 shorting. It's $10.47 now. So, I mean, slightly there again, but banking stocks have had support. But again, interest rates go up. Fed's decision. Pay close attention to CPI coming out probably next week, and then jobs numbers. See everybody tomorrow. Please join me. Thumbs up if you like what I do. Head on over to Discord. Have a great morning. Be safe.